Hello, good afternoon, everyone. Good evening, everyone. Happy New Year, everyone. Okay, this is Elkie here with you guys today. And this is my first webinar, first live in for the year 2026. Okay, welcome to our section for today. Okay, thank you very much for joining our section. Let me put on my screen real quick. Okay, yep. All right. Okay. All right. Yes, there we go. Okay. Let's do this. Okay. So, good evening, everyone. This is Elkie here with you guys today. Welcome to our webinar for the first webinar for 2026 after our market outlook. And our topic today is the seasonality in Bursa Malaysia. All right. Okay. So, here with you guys today is me, Elkie with you guys. If for some of you that has been following us for quite some time, okay, I know that we haven't been doing our January monthly traders talk because we see that the content it might be coincides with our market outlook, so that's why we decided to postpone it to have our first talk from our team in the month of February. Okay, so it will still be the first Monday on, I believe it's on the 9th. Okay, because second is the public holiday. Okay, so we will do it on the 9th. Okay, so for those who have been following us and wanted to know a little bit more about our view on the market and even chit chats in our section, we will rename the section, but it will be a platform for us to interact, to ask about the markets, and also share the view, insights, what to look in the markets. Okay, yep. So welcome to our section today. All right. So if you have any problem, my voice, my connection, all this, please do let me know in the comment section. Otherwise, we will move on with our topic for today, which is seasonality. Okay, so why I choose this topic at this time? Okay, because I think that right now it's the first month of the year. Okay, and there is another 11 months going on, and I think that this is the time whereby we really want to know, and also really start planning how we're gonna do our money management. What are the stocks that we're gonna plan to invest? And through seasonality, it can give us some insights on what are the potential opportunity down the road for the year. Okay, yeah. So today in this section, I'm not gonna just share with you what are the seasonality in Bursa Malaysia, but also I will be sharing with you how we find the seasonality and how to prove it, and also how to chart it, trade it. Okay, so hopefully it will be an enjoyable night for you guys. Okay, all right. Okay, so before we start the sessions, okay, I would like to ask all of you right here a questions. Okay, I believe many of you right here might have been trading for some times. Okay, if you haven't, if you're new, then never mind. Okay, just think. Okay, if today I want you to describe how you think the market it move, okay, what would be your answer? Do you think that the market move in random, okay, without any directions, or you think the market actually move in a recognizable pattern, and you want to know the pattern? Or market is just like human, it move as it like, it move based on the emotions. Today he happy, it go up. Today is angry, then it might, or sad, it might come down. Okay, or maybe Trump one word, then the market crash like yesterday. US indexes can down so much, drop more than a percent after Trump said, "Hey, we need Greenland." Okay, and then here and then we're gonna put on tariff on you if you don't to talk or do all of this. Okay, yeah. So how do you think the market move? Do you think that it's random, is pattern, or is emotions? Okay, many times many people actually think that, okay, I know market is not random. There are certain patterns in the market, but I don't feel like I seems to able to find the patterns, because when I try to look for the pattern, I think it's this pattern, and somehow I'm gonna snook, I'm gonna die in the trades, or even sometimes the market is like emotions can swing up and down like crazy. Okay, uh, for me, I would say that definitely markets. There are times whereby market are unpredictable. Actually, many times market are unpredictable, but times there are times that market move in a pattern. Okay, so what we're gonna do here today is we're gonna try to identify when is the time that the market gonna move in what kind of patterns. Okay, and once we're able to recognize the time and the patterns, okay, then there we can go for the seasonality trades. Okay, the market doesn't move in a recognizable pattern all the time. There are time for it. Okay, many of the times market, it could move in random, it could be driven by emotions. So all three right over here, they are correct. It can just swing up and down, it can just move in random. Okay, but it really depends on what stage it is, what is the time frame, what is the phase that the market is undergoing. Okay, and as a trader, as a professional trader, as a profitable trader, what we need to do is do the right thing at the right time. Okay, so first is find when is the timeline, the correct timeline, then we do the right thing. All right, okay, so that will be our main topic, our main goal for today, where we really want to understand what is the seasonality, and we want to also look beyond the theory and backtest it, and how we can strategize it and put it into use to improve our trading results. Okay, yeah. That will be our goal for today. Okay, so welcome to our section for today, and my name is Elki. So for any of you that who are not familiar with who am I, okay, this is my picture when I was young. Okay, I'm much older right now. All right, okay, so I started in this field since 2012. That's 14 years ago. Okay, and I have been talking about the market. I've been sharing the knowledge, all these things, since more than 10 plus years ago. Okay, especially after I graduated from my prop trading. Okay, that was the time that I have been really actively doing a lot of technical trading, training, webinars with quite a number of brokers. Okay, yeah. So right now I'm with Burjaya Securities as the head of retail dealing. Hopefully, at right here we able to help our clients to do better in their trading and make a better investment returns. Okay, yeah. So that's who am I. Okay, so first let's start with what is seasonality. Okay, so basically seasonality, it actually telling us that there is a recurring patterns at a similar time. It's almost the same time every year. Okay, but seasonality is not only on a fixed timeline. Okay, it could be a cycle, it could be like a few years kind of timelines. Okay, whereby all these prices, all these sectors, all these markets, they could be showing a very similar patterns due to repeatable behavioral factors, economic factors, or even structural. Okay, so what do we mean like this? On all this. Okay, so for example, like we talk about consumer spending cycle. Okay, yeah, if we are talking about buying, doing grocery, all this, then that's even doing grocery. Okay, even doing grocery itself, there are patterns. Okay, most people, they don't just do grocery every single day. Okay, for those who are working, their grocery time, it's likely to be weekend. For those for big tickets item, okay, it could be during mega sales periods, or maybe during festive seasons before Christmas, or even Chinese New Year, Hari Raya, all these periods. Okay, and like earnings report, we have quite a we know every year we have 4 times of heavy earning seasons. Okay, those months. Okay, and of course, like commodities, we have their harvest cycle audits. Okay, so you can see humans, not only human, most of the things in this world, they are moving in a pattern. Just that, are we able to capture it? And some of the patterns, it can repeat in a very short time frame. Some of the patterns, it's actually repeat over a longer period of time. Okay, yeah. So once we're able to capture all these patterns, okay, and we able to take note on all these patterns, and we actually link it to how it gonna create, how it can affect the businesses, how it affects the share prices, and from there we're able to derive the seasonality on the market, the seasonal impact. Okay, so basically seasonality itself, it actually tell us the market behavior at selected time, at a certain time, and these patterns many times it repeats over and over again. Okay, so once we are aware of all these repeated patterns, okay, then we then all these patterns, it actually give us a probability bias. Okay, we know that during this period of time, given that for example um elections. Okay, let's take elections for an example. We know that when it comes near to the elections, when it come near to the elections, many construction projects, they might on hold. We might not seeing dish out of new contract, all this thing, because we might have a change of um we will gonna have an elections. Okay, so there might be some slowing down in the construction sector. Okay, so at that period of time, then we know that the probability of making and profiting from construction counters, construction companies, is much lower compared to other times, compared to after the elections has over. We have very quick the government's the new cabinet has formed. Okay, we know that they're gonna kickstart all the projects, and those are the period whereby we will see a pattern whereby there will be more constructions award being dished out. There will be uprising movements in the construction, and that is a cycle, that is a pattern that we able to capture, and that's on the idea of the election cycle. Okay, yeah. So but one thing that many people, especially those new traders, they mistaken is they tend to take it that seasonality is like a prediction that where the market is gonna move. Okay, so for some of them they might say, oh, okay, seasonality telling me that at this time the construction stocks are gonna move higher. Okay, so I just close my eyes and buy it because seasonality all this while has been strong, it has been positive, then I just buy it. Okay, so that's a big no. Okay, yeah. Seasonality, it doesn't mean that during that period of time the price, it must go up at that time. Okay, imagine when we just now we talk about the election years. Okay, what if we get a strong cabinet, a strong government, compared to what if we get a weaker coalitions of the government forming. Okay, then we will see that the amount of size, the projects. Okay, and of course, if we get a government or a group of cabinets that is emphasizing on other thing rather than constructions, then we will see a weaker movement in construction stocks compared to other industry. Okay, so the seasonality itself is not like a fortune teller. It doesn't indicate that the past it will repeat that perfectly, exactly. Okay, but it actually give us a probability bias telling us that, okay, at this time, we are having a better probability that this sector gonna perform better compared to other sector, compared to other time, okay. But given that other factors they stay unchanged, or they are even encouraging the business, the growth for this industry, okay. So the seasonality, it gives us a guide to look into this sector at this point, and from there, as long we're able to identify all other factors, let it be environment factors, let it be human factors, they are not subpathologic. This the business, the theory, okay, that is where we can then from there we can more confidently invest our money into that seasonality strategy. Okay, yeah, it doesn't sound that complicated, okay, but after what I want to bring out is after we have done all this homework, okay, we don't want to just blindly buy it. What we want to do is we want to do a second layer of screening on all other factors, okay. Then from there, we will decide whether we want to take up this trade or not. Okay. So later part of the section, I'm gonna share with you how we're gonna determine the similarity, all this, and also I'm gonna share with you a very simple approach to set up the strategy, and from a simple approach how we can evolve and also do it better. Okay. Yeah. So how to get started? Okay. So there are three components to get started. Okay. The very first one is we want to build the mindsets. Okay. The mindset of pattern. Okay. Yeah. We once we believe that the market it will move in the patterns, okay, then from there we where what is the pattern, okay, try to find how the patterns how the pattern it's how the business behavior, okay, it implicates the patterns, okay. Then from there we build our hypothesis, okay, based on the business logic. And lastly, we want to do some back testing, do some measurement on based on our hypothesis how the share price is actually reacted, how the market erected, what kind of return that we are getting, what kind of winning rate that we are getting, what's the probability, because there is no strategy in the markets that gonna give you 100% winning rates, 100% probability. Okay, yeah. So we want to make all these evaluations and testing out the strategy for a long-term play. Okay, what I mean long-term play is not buy the stocks and hold long. Okay,
Sorry, Alki. Sorry for interrupt. Your sounds a bit laggy.
the sound a bit laggy.
Yeah,
Hello. Right now, is it better?
yeah,
Hello. Is it better right now?
yeah. Right now it's better. Thanks.
Okay. All right. Okay. So once we've done all this, then we can have the strategy roll out and then do it for long term. Meaning long term, meaning like every year when it comes to this time, we're gonna do all this process all over again to see we're gonna have this strategy to go on for the year or not. So it can be down the road 5 years, 10 years. Yeah. Okay. Yeah. So later today on this section, I'm gonna share with you a strategy that I shared to my audience. I think 5 or 6 years ago. Okay, and today it still works like ago. All right. Okay. So first, the mindsets. Okay. So if you want to trade on this seasonality strategy, okay, you might want to start ask yourself some of these questions. Okay. When if let's say I'm looking at F&B business, okay, then we want to ask ourselves, when does the F&B business make the most of its money? When is the time? Okay. And what kind of events it will affect F&B business, or it will affect the clients, okay, to causing the clients to client to buy more or causing the client not to buy the products or not to go to restaurants. Okay, and when is the busiest months? Okay, and if throughout the year, if is there any window that's there'll be big tickets item that the business have to pay? Is there be any amortizations? Is there be any tax window? Is there be any any replacements of the workers or of the inventory, all this? Okay, so before you want to look into that counter, okay, you really want to ask, so-called know the business inside out. Okay, because right here when we trade on seasonality, we are not trading buy and sell on a 4 digits number. Okay, not 4 digits stock codes. Okay, it's not only just a stock code, a figure that flashing on our screen. It is a business. It's a business that runs day in, day out every single day. Okay, so the more we understand the business, the better we can understand how the seasonality it works and how confident we're gonna be. Okay, yeah. So just want to talk about F&B. Okay, so let's look into an example for consumer and retail business. Okay, so first go to the very first question just now. Okay, we talk about that. When is the time? Okay, so during like tourist season, like holiday periods, during the festive season, during the sales periods, those are the time that we should see all this retail store, all this F&B, all this consumer products business, they enjoy the most, right? Are you agree with me? Okay, those are the time that we can see that they're gonna have higher sales, or even they can have a better profit margin, because when tourists they already have the budgets to spend during their traveling. They don't mind spending a little bit more, buying a little bit more, a little bit more expensive. Okay, so for during the tourist peak periods, they could have a better profit margins, and also with a higher sales volume, they able to enjoy from enjoy the a better margin due to a larger volume. Okay, yeah. So during this period of time, those are the time that we should expect that consumer and retail business they are doing better. Okay, yeah. So for example, right now we know that very soon next month we're gonna have Chinese New Year, then we're gonna have Hari Raya in March, I believe. Okay, so first quarter of 2026 is full of festive seasons. Okay, so when it comes to this festive seasons, okay, retailers, food producers, beverage companies, logistics firms, all this, they are likely to see higher sales. Or actually, we are already enjoying it because we just had Christmas last month. Okay, then we have the New Year, and next we're gonna have CNY Hari Raya. It's a full pack of festive since December all the way until March. Okay, so what do you think? How the business for how the business gonna be like for all these consumer business? Okay, all these retailers, all this that we are putting up right over here. How do you think their business gonna be? Okay, so for the first case study we're gonna look at is I chose Padini. Okay, I chose Padini for clothing. Okay, yeah. So we know that usually for clothing, when especially when it comes to holiday season, when it comes to year end, Christmas, all this. Okay, we most of the time we will see like they have all this year end sales, and then it comes to CNY, it comes to Hari Raya, there will be new clothing, all this thing. So are we expect that we get for Padini? Are we expect that we're gonna see a higher revenue, a higher sales figure for year end Q4 and also the first quarter of the year? Okay, so if we are expecting, if our answer is yes, okay, if your answer is yes, then we might want to see if this revenue, if the pattern it's repeat for over the year. Okay, so sorry, I think okay, never mind. Okay, so if we look into this chart right over here, so what I have done right over here is this is actually a simple chart that every single one of us we can do it. Okay, uh, what I have right over here is I actually I actually put in the revenue for for every single quarter. Okay, so this is for the result for the until end of December. The for Padini is it's started in June. Okay, year end is in June. Okay, so September is July, August, September. Then we have October, November, December. Then we have January, February, March, and after that we have until June. Okay, yeah. So for the revenue during that period of time, I just put in the figure and then eventually stack it up. Okay, and I stack up 10 years of result because in between of some year it might be some year it could be may be higher, some year it could be some year it could be much qr to be higher, sometimes it could be December. But as we are stacking over a longer period of time, okay, we can see that the result it tells. Okay, so we can see the repeated patterns right over here. Okay, so we can see after we put in 10 years of data, we can see that February usually combining all the 10 years data, February is it has the sorry, not February, I mean December. Okay, for the quarter, uh for December quarter, it has the highest revenue of all, okay, throughout the year. Okay, and this actually just come in line with what we are talking about. Okay, because December we are for when it comes to year end, November, December, we are expecting there are more people spending on the clothing. Okay, and that also spill over too much, whereby we have Chinese New Year usually in January or February. Okay, yeah, so we can see that for December and also March, these are the 2 months that we are having highest revenue for Padini. Okay, then if we continue to move on into the charts, okay, so what we can do is we can pull out a monthly charts. Okay, from monthly chart right over here, we can try to see. Okay, since we are saying that the December one we is seeing a better revenue. Okay, a better revenue. Okay, are we as and the result for December one, the result will be announced in February. Then are we seeing a positive movement in February every single year? Okay, then we go to the monthly charts. You can see this chart is from 2014 all the way to 2026. Okay, so you just go to every February and then see whether February is moving higher or moving downwards. Okay, but at one glance looking at this monthly chart, you might be like, wow, okay, how to look at it, and it doesn't give me any clue. Okay, so there is another way of illustration whereby you can actually record the changes, okay, of every single month. Okay, and then you can plot it out into, sorry, let me try to reload. Okay, okay, you can plot it out into something like this. Oh shit. Okay, I think we have to just stick with this mode, uh, because once I put into presentation modes, then it become blank. Okay, I hope you guys can see. Okay, yeah, so we can put it into something like this whereby we separate it by the months. Okay, and then we record what are the changes. Okay, every single month. Okay, so this one I'm doing the monthly changes in percentage. Okay, because if we do in the net change wise, it might varies because of some months the as the price it goes higher, then the changes could be more, or sometimes the price share price could be lower. is lower, the changes could be minimal. Okay, but if I'm using percentage, then it could be more so-called standardized. Okay, yeah. So if we look into the monthly changes for Padini, okay, we can easily see in first is we can see we are seeing more green right over here. Okay, at the first half of the year compared to the second half of the year. Okay, so just now we just say that in February and also in May are the two months that we are seeing a higher sales figure. Okay, whereby just now we can see that the lowest one usually is the one that announced their results in November, which is for the first quarter. Okay, so you can see, sorry, let me try to reload this. Really sorry about that. Okay, so if we look into the chart itself, we can very clearly see that as the market expect the result to be weak, okay, like the month of November and December, Padini share price for their monthly changes usually isn't that great. Okay, yeah. So okay, so we can see that on the anticipation that their revenue has been doing better for the last quarter of the year, which the result usually it will be announced in February. Okay, so you can see most of the time the February one is in greener, or even if the sentiment is great, it might prolong to March. Okay, but from here we also can see that this doesn't guarantee. Okay, like so February must we just buy and hold, definitely gonna be profitable. So we can see that in last year February it actually dropped 15% for Padini. So last year if you just buy and holding Padini in the month of February, okay, you're gonna lose 15% of what you invested. Okay, yeah. So don't do it blindly. Okay, see how the overall environment is, the overall sentiment is. Okay, whether does it support to do such a trade during at that time. Okay, yeah. So let's continue. Okay, so another way of looking into this is we can also look into the win rates as well. Okay, so for those who are not chasing for those who are looking into that, I don't mind it's making more or less. Okay, but what I want to do is I want it to be positive. Okay, then what you can do is you can look for the winning rates, whereby for March, July, August, and September. Okay, those are the month whereby we will see more winner. Okay, whereby we have 7 out of 11 years are in positive for Padini. Okay, but on the other hand, if we look into which months is the worst performing, we can see that November actually is the month that we really don't want to touch Padini. Okay, especially those are the time whereby we are seeing the QR. Okay, and 7 out of 11 years are in losses, and we will expect that the sales number will be lower than the previous quarter. Okay, so by doing this, you can see that the seasonality itself, it gave us a guide whether when is the time, when is the right time to do the right thing. Okay, yeah. So after understanding all this, like let's say right now we are seeing that February and March it could be a good time to buy into Padini. Then we really want to come into the chart whereby we can see, all right, I want to buy Padini for the month of February and March. Okay, if I look into the charts, we can see that in the year 2025, Padini has been dropping in a very strong downtrend since January since January, okay, in the month of January, okay, and the selling actually prolonged into February itself, okay. Yeah, so we can see that the trend itself, it doesn't support to do a buy at that time, okay. How about this year? Okay, this year things are quite different from last year. We are seeing that the share price is moving above the moving average. This blue line is 20 days move average, is finding as is stabilizing above the 20 days move average, whereby this 1 ringgit 80 cents could be a bottoming area, okay. And at 1 ringgit 92 cents with 1 ringgit 80 cents, slightly below 1 ringgit 80 cents as a stop loss, that give us somewhere around like 5 to 7% kind of stop loss. So you can see we couple in the risk management. Okay, so if this 5 to 7% stop loss is something that is acceptable, okay, and the trend is supports as well. So we couple with the technical reading. Then when it comes to the month of February or the month of March, we might want to do a buy or even do a buy in the month of March, February, and try to hold it as long it able to hold along the 20 days moving average lines all the way until March, and try to ride on so-called a potential uptrend on this seasonal patterns. Okay, yeah. So this is how the seasonality is able to help us to form a strategy. Okay, very similarly on Heineken. Okay, Heineken Malaysia. Okay, Heineken Malaysia also benefits from similar scenario. Okay, like during the holiday season, whereby the school holiday, we have more traveling happening, okay, and also festive seasons, especially during Chinese New Year, okay, the sales for Heineken, not only Heineken, for FNN, okay, it could be increasing, okay. So is this the time for us to look into all these beverage companies, whereby we were expecting a higher consumption volume? Okay, so similarly, we do exactly the same thing again. Okay, we look into the revenue, because revenue, it represents the sales figure. Okay, so we plot into the revenue for every single quarter. Okay, so for Heineken wise is go from March, May, July, September. Okay, okay, and go on. Okay, so we can see the patterns, they are up down. Okay, so we can see there is actually a pattern for their earnings. There are some months, some quarters, their revenue figure will be higher. Some quarter their revenue figure will be much lower. It's like here up down like that. So it actually, our very first screening is actually telling us that is a pattern. Okay. Next, we do exactly the same thing again. We stack it so that we can see when is the so-called the persistence and repeatable higher the patterns in all this quarter, and from here what we are seeing that it's actually matched with our theory, our logic, whereby by the year end, which is the quarter ending December, okay, which the result will be out in February as well. Okay, and also following that will be the quarter ending March, whereby the result will be out in May. Okay, so we can see out of all these 4 quarters, the quarter ending December will be the one that's having the highest revenue for all of all these years. Okay, next we go into the monthly charts. So you can see this is a process that we can repeat and do it every single year, every single counter, every single hypothesis. We just repeat the same process over and over again, and from there it will able to help us to form our seasonality strategy. Okay, not only on this consumer, not only on this Heineken, you can do it on FNN as well. You can do it on maybe you can do it on Kopi. Okay, you want to see any month that Kopi is doing better than other months. Okay, those are the months that we will expect a higher sales number, and potentially also a better better result to be released. Okay, yeah. So same thing when we come to money chart. If you think that the money chart is not something that you can see the patterns, okay, if you're not a chartist, okay, then what you can do is you can build into the table, okay, recording down the changes for every single month, okay. You just mark it green if it's a positive month, or mark it red if it's a negative month. And from there you can see that when are the period that you want to avoid. You want to avoid Heinekens, trading into Heinekens in the month of June, starting in May, going to June, all the way until August. Okay, and also maybe October as well. Okay, so we only want to engage Heineken when it's after November, when it comes to December, all the way until uh, end of February or even March. Okay, so in one glance, it actually gives you a a very clear illustration when is the period that you want to engage in this counter. Okay, yeah, so you can see that the whole approach is actually very simple but tedious lah. Okay, but no one say that making money is easy and it's just a few click. Behind every for every decision making behind the few clicks, these are the hard work that we have to put in to ensure that for every single click that we are clicking in the markets, it gives us a very high chances, high probability of making money. Okay, so these are the hard works that I'm sharing with you guys, that you guys can look into it. Okay, and for Heineken, so-called beginning of the year play, I've been sharing with my clients for more than 5 to 6, 7 years. Okay, and even today the strategy is still works like a go. Okay, yeah. Okay, so if we look into if we've done plotting all this, okay, we can see that the best winning rates for Heineken it will be in February and December, because out 9 out of 11 years, those in all these months, these 2 months, the most of the time they are positive. Okay, uh, and with that we want to avoid it in June. So, okay, yeah, because 8 out of 11 years they are in losses. So you can see this is just a very simple maths that we are doing. Okay, yeah. So if we look into Heineken Malaysia, the current technical chart right now, we can see that Heineken Malaysia um, form a double bottom right over here at 20 ringgit and actually start rebounding. Okay, and the double bottom midpoint somewhere around at 21 ringgit 50 cents. Okay, so if you're a bargain hunter, you might want to wait when it comes to 22 ringgit or even near to 21 ringgit 50 cents. Then you want to start to do some accumulation, believing that the February and March it will perform. Okay, otherwise, if you are technical traders, then you can couple your technical reading, methodology, whereby you might, if you are moving average traders, you might want to look into a bounce from moving average or even a golden cross. Then you want to start to position in for Heineken Malaysia. Okay, this red line is 200 days moving average, by the way. Okay, yeah, so these are all the things that you can actually formulate so that you have a fixed stop loss, a better risk management skill, portfolio management. Okay, and from there it actually can help you to do better. Okay, so these are the second layer screen that we are talking about. Okay, and of course if we talk about fundamentally that we can actually look into, is there any changes in the tax, is there any changes on the FX, all this, okay, where it might affect the result as well. Okay, so last but not least, okay, besides the consumer strategy, there are many more other seasonal strategies that we can explore. And after today's section, you can try to explore by yourself and try to build into your playbook, into your portfolio strategy. Some things like earnings announcement where we have have every 3 months. We have dividend distribution months. We have like window dressing. Okay, you can see last month December we had a very strong rally. The index break 1700s. Okay, on window dressing, and we're gonna have every year we have budgets, and the budget timeline is somewhere around like in October. Then what happened to before the budget? So build your hypothesis and then look into those sector or the leaders of the industry to see if there is a noticeable patterns that we can actually plot it. Okay, just repeat the whole process that I have been sharing just now. Okay, and of course, if you are looking into something commodities, or like pump, okay, for commodities, right, it has even a fixated cycle, their harvesting cycle, their planting cycle, when they have a higher production figure, when they will have a lower storage numbers. Okay, so and every time when they have all this, what will gonna happen to the share price, to the plantation counter? Okay, their revenue, their profitability. Okay, how the CPO price is gonna change. All right. Okay, that's why for those who have been following us on Money Trader Stock, you know that these are some of the this is the backbone whereby in certain months I was calling like to buy into some of the plantation companies, to buy into some consumer company, all this. Okay, yeah, all right. So there are so many more other seasonal strategies to explore, and if you really have no idea, a very simple way that you can so called like the cheat sheet is you can go into the quarterly reports or the annual reports for the company that you want to study. Okay, and then you just read through it and look for a section whereby it's marking seasonality. It will tell you whether their income does it any seasonality impact on their business and on their income. Okay, yeah. So from the annual report, from the quarterly earnings, they would already indicates. And even if you are looking into IPO, it is there for the seasonality of the business. So from there, you actually able to pick up for every single business if the business have any seasonally patterns behavior, and if yes, when usually when would it be, and from there you're able to build into all these strategies that we were sharing. Okay, yeah. So executing strategy. Okay, so once you have done all this, okay, when you have done all this, like for example, just now we talk about but the best month for Heineken is December and February. Okay, so let's say if we fixated it to be February, a very simple trading approach. This is the so-called the blindly approach that we are talking about lah. If you really want to do it, but you don't have any technical knowledge, all these things, what you can do if you really want to do blindly is okay. So I believe that every single month for February it's gonna be positive. So I buy during the last trading day in January closing price, and I sell on the closing of last trading day in February. Okay, but by having this trading approach, you know that you haven't been covered on the risk management. Okay, like Padini, what happened to Padini for that month? It dropped 15%. Okay, yeah. So you know that you have a high risk exposure on the risk. Okay, and the probability of winning it will be lowered because you did not do any screening on other fundamental factors like FX, like the raw materials. Okay, all this. Okay, if there's any changes on the policies, taxations. Okay, so all these are some of the factors that could affect the strategy. Okay, but it will be momentary, whereby for maybe just for that 1 year. Okay, and the next year, as the consumer behavior it persists, it repeats, we will see a repeatable share price pattern as well. Okay, yeah. So if you just doing this blindly, okay, like if you're buying on January last year, 31st of January, and then you sell on 28th February, for example, last year, 2025, and that would actually give you a whopping 9.7% return in a month. Okay, but if today you are more if you have technical knowledge, then you might want to combine. Okay, I'm gonna wait until it sit on the 20 days moving average and break out, then only I buy. Then you might be buying slightly higher at 25. But yet you also can exit slightly better, whereby you can see it retest 27 ringgit 50 cents level. There where you want to take some of the profits and just leave a balance for a potential breakout, or it might not be coming, whereby then you might cut half or even you cut on the strategy ending. Okay, so you can couple with all this and also put a risk management, whereby you want to stop out if it's break below 24 and reload again if it trade back above the 20 days moving average. Okay, so these are some of the additional strategy rules that you can put into cover on the risk side and also have a better management of your trading strategy. Okay, but the seasonality itself, once you have done all this homework, it will be able to give you a general idea and also the guide for the direction where to go, and the rest it will really up to you to furnish the detail out the strategy. Then from there you will be able to produce a so-called a profitable strategy that can be repeatable every single year. Okay, yeah. So I hope that with this it actually gives you an idea how the professional, how a trader actually able to turn a general idea into a tradable approach, and from there how we actually just doing we don't need to do it everything in one shot. Okay, in one shot, but we can just develop it over the year. Okay, 1 year just finding out one or two strategy, study into the sector, into the industry to find what is the seasonality for that industry, and then we can kickstart on the next year. And as the time it goes by, 10 years, once down the road, like 10 years, then you have 10 different strategy already where you can repeat it over and over again. And that's how the compounding impact will come in, and how you're able to roll your money faster and faster in this investment markets. Okay, so that will be the our sections on seasonality for today. Okay, if you like our sharing our section today, do feel free, do please scan this QR code and like our Facebook page, our YouTube channel. Okay, and follow us. If you have any questions on the strategy, on the information that we shared just now, okay, feel free to drop us a WhatsApp at this number. Okay, and as mentioned on the previous slides, to as a disclaimer, today the section is for general knowledge and also investor education purposes only. Okay, yeah, I know that Heineken strategy, the profit, the high profitability is in February. Okay, but this is not a buy call. Yeah, all right. Okay, just if you're interested, just keep an eye on it, and you do your risk assessment whether you want to trade it or not. Okay, all right. Okay, thank you very much for attending our session today, and we shall see you guys next month. All right, thank you very much, and have a good night. Bye bye.